So there's this ETF. Over the past 10 years, it's beat SCHG, it's beat VOO, it's beat SPMO. And over the past 3 and 5 years, it's also beat all of those ETFs. However, it's also beat QQQ. And even though this ETF outperformed over those time periods, I do think there is something that you need to watch out for with this ETF. I'm not saying it's not a good ETF to buy, but you're gonna wanna know a few things before you do. So here's what we're gonna do in this video. We're gonna compare MGK, and that's the Vanguard Mega Cap Growth ETF. We're gonna compare that ETF to VOO, which is the S&P 500 ETF. We'll also be comparing it to SCHG, the Schwab US Large Cap Growth ETF. And then finally, we'll compare it to SPMO, the Invesco S&P 500 Momentum ETF. Now, while we're comparing these ETFs, what we're gonna be doing is going over my ranking process. And in that ranking process, there is always a clear winner, so you'll see that. But then I'm gonna go through my free web app, and I'll show you how, instead of going through that whole ranking process I'm gonna go through, you can just click a few buttons and do this yourself. After that, we're gonna take a look at MGK versus 2 other mystery ETFs. And then finally, as you will see, MGK's rates of return are amazing, but we're gonna have to talk about what to watch out for when investing in this ETF. So let's start with my ranking process. The first thing we do is we look at expense ratio. I'll tell you today we're talking through a growth lens, so we're looking at MGK as a growth investor, someone who wants to have capital appreciation. In my process, what I say is that if that's my main goal, just capital appreciation, I'm trying to, let's say, beat the market, I'm a growth investor, I don't really care that much about expense ratios as long as they're under, let's say, 20 basis points or 0.20%. These are all under that. So you have VOO at 0.03%, SCHG 0.04%, MGK at 0.07%, and SPMO 0.13%. So these all have a similar score when it comes to the expense ratio. Now, next up is yield. The thing with yield, we're not really using this in the ranking process because this is growth investing. If we were talking about a dividend investing lens today, if we were talking about dividend type of ETF, this would be important. And while this isn't gonna be part of the rankings, we do wanna maybe take a look at it. Maybe you're interested. So SCHG has a 0.35% yield, MGK has a 0.37% yield, SPMO 0.65%, and VOO has the highest yield at 1.13%. Not very high yielding ETFs, because these are ETFs that you buy to try to grow your money. It's not to try to have yield. It's not to try to have dividends paid to you. Next up, we have the max drawdown. So the max drawdown for this particular set of ETFs, it goes back to October 12th of 2015. And so what we're doing is we're saying from a peak that this got to down to a trough, what's the most that these ETFs fell? This is over any time period. It could be 1 month, could be 5 years. It's from that peak to that trough. What's the max drawdown? And so what we see here is a negative 30.95% drawdown for SPMO. Then we got a negative 33.99% drawdown for VOO. We have a negative 34.60% drawdown for SCHG. And then finally we have MGK with the highest max drawdown at 36.01. Now, when I look at this, I think to myself, SPMO really looks a lot better in terms of max drawdown, but that doesn't mean it's necessarily better for risk. What we want to now do is maybe take a look at volatility. So let's take a look at volatility. We have VOO, which is the least volatile of these, even though it had a decent max drawdown. It's a 15.53% volatility, where SPMO has an 18.48% volatility, which ends up being less than SCHG at 20.35 and MGK at 20.90. And so what this kind of tells me is that if I'm looking at these and I see SPMO having a better max drawdown by far and better volatility, it looks like a less volatile or less risky ETF in terms of these like risk metrics. And so what I would want here is I would want MGK to really, really shine in terms of returns, to make sure that I'm taking the risks that I need to put up with a volatility that's maybe more than the SPMO when I'm comparing these specific ETFs, right? Let's take a look at the diversification. Now, here's where things start to look interesting. MGK has 69 holdings. It's a mega cap ETF, giant companies. So it's not even 100 holdings. I do think that 69 holdings is enough to have a diversified portfolio. I'm not one of those people who are like, you need 10,000 stocks. Like, it's okay to have like 100 stocks or even 69 stocks and probably be quite diversified. SPMO has 101, SCHG 197, VOO 507. So VOO has the most stocks. It's the S&P 500 ETF, right? And then we have the size, so how much assets under management. SPMO, 13.3 billion, MGK, 31.3 billion, SCHG, 54.2 billion, and then we have the behemoth, VOO, at $1.4 trillion of people's money that are in these ETFs. Next up, returns. So here's where we need to find out, does MGK do a good enough job to justify having more risk? Okay, so let's look. We got 22.98% return over the 3-year annual rate of return for VOO. I'm always saying this in my videos. That is an amazing return for the S&P 500. It's completely and utterly phenomenal. Embrace this time period, people. If you're invested in the general market, you're killing it. You should be very happy. Now, let's talk about 29.23% SPMO. Even better, amazing, right? Then let's get even better, 33.88% SCHG. So, hey, MGK, 34.85% return for MGK. Killed it. Completely killed it. That's over 3 years. So you take a bit more risk, you get a lot of return. Now let's see over 5 years. How does it do? 16.18% for VOO. Amazing returns for 5 years. 17.56% for MGK. So falling a little bit behind here on the 5-year return, 17.61% for SCHG. These, of course, are amazing returns still, but SCHG now a bit better. And then SPMO, even better, 19.81%, almost 20% for SPMO over the past 5 years. So that leads us to the 10-year return. Can MGK shine enough so that it can justify the higher risk in this 10-year return? Let's see. First off, we have 14.38% VOO. Thank you, VOO. Thank you, stock market, for doing so amazing over the past 10 years. It's just so good. But thank you also to SPMO, who have been invested over the past 10 years at 17.81% return. Very good returns. We got 17.89% SCHG. Great returns. Congrats to anyone who has invested in SCHG over this time period. And then we got 18.02 MGK. Now, before we get to my answer of which one I think is best based on my ranking process, let's take a look at the growth of $10,000 so we can see in number terms what this is actually going to look like. And so what we have here is VOO at $38,318, SPMO at $51,503, SCHG at $51,854, and MGK at $52,442. And so here's where I want to explain why my ranking process is the way it is. So you had to go through more to get from a $51,503 to $52,442. You had more volatility, you had more max drawdown, there was more risk. It was a harder ride. Now, I don't know if you care about that or not. Only you know that, right? But the way that my tool works, the way I rank these things, is that I want to take risk into consideration. So then when we come over here and we see the scores, this is looking through a growth lens. This would look different if we were looking through this from a income lens or dividends, or if we were looking just through a passive lens. But if you look at the red, that's the weight. And so like the expense ratio is 0.1, or think of it like 10% of the weighting. So then we have volatility and max drawdown are both 20% each of the weighting. And then 40% are the returns. And so what ends up happening is that number one, based on volatility, MGK doesn't do as well. So it doesn't get as many points there. And then in terms of the 5-year return, it also didn't quite get as much as, for example, SPMO, which did much better than it in the 5-year return. And then in the 10-year return, while it did better, it didn't do that much better than SCHG and SPMO. And so the way I rank things, it's not strictly just, hey, this is the return, therefore it's higher, so therefore this is a better ETF. There's a whole ranking process that goes through it. And now I'll show you my free web app that does this exact same ranking process with a few buttons, and I'll show you how it looks. The first thing I do is I say, okay, I'm gonna be a growth investor for this one, MGK, CHG, SPMO. I'm gonna hit this add button, it's gonna add them here, and then I'm gonna hit compare. It's gonna do its thing, it's gonna go through all the calculations I just showed you, and we're gonna see a winner basically. So this is telling us that SPMO is the best ETF based on the rankings I just told you about. So it's exactly what I discussed. Basically, the 10-year return is almost as good as MGK, 18.1, and there's actually a better view to see this. We'll look at that in a sec. But I do want to show you SCHG ranks number 2, and VOO actually ranks number 3 here. So we'll take a look down here, and if we look at volatility and we rank and we sort it by volatility, highest volatility, of course we can see MGK is the highest, and it's much higher than VOO's. But then if you rank it by 5-year return, you could see that VOO isn't that far off from MGK in the 5-year, and each of these returns is taken into account when it comes to the ranking process. So SPMO just did a lot better on all the different returns that we're using here, the 3, the 5, and the 10. And it did better on the volatility, it did better on MAC drawdown. So SPMO ends up being the best in this ranking. Now, okay, I told you I was gonna throw some other ETFs in here. So let's throw in QQQ. SPMO did better on the 5-year. And then if we take a look over here at the volatility, to rank it by volatility again, you got QQQ with a 20.7% volatility, so almost as volatile as MGK. And so that's what's kind of interesting. MGK has more volatility than QQQ does. And then if we go through the max drawdown, MGK still has the highest max drawdown than QQQ. After going through all this is not to say that MGK is not an ETF to invest in. Now, I'm saying for me, the way I'm investing, I would invest in SPMO over MGK. I'd actually invest in it over most of these, except I would of course want exposure to the general market, so VOO would be on there, or any S&P 500 tracking ETF. But the thing that I want in my investments are access to specific factors. And so what I would maybe ask you is, what do you think might happen going forward? So MGK is only investing in mega cap companies. Do you think the mega cap companies are going to be the ones over the next 10 years, 15 years, if you're a long-term investor, that will have the highest returns? You think this will essentially continue? I think history is probably against that idea. And it's not that current mega caps will be continuing forward, because this will rebalance. What I'm talking about here is, will the general category, mega cap stocks, be the best performing category in the market? Because it has been lately. But will it continue? In the past, it hasn't been. Mega caps haven't been the best performing subset of the market, right? What I like about SPMO, or just momentum in general, is number one, while people do think that momentum is this like super risky thing, it's actually not. And you can see in the risk metrics, momentum is less risky. Let me just show you here real quick. In terms of max drawdown, SPMO has a better max drawdown than VOO, so it didn't lose as much. Over this time period we're looking at, it does have more volatility, but still compared to these other ETFs, they're super growth ETFs, it doesn't have as much volatility. So momentum, the way I see momentum and why I like momentum, it's a factor. It's been proven academically that people invest in stocks that are going up. And especially if you can add some other things like quality or value or whatever. I'm not saying SPMO does that, but I'm saying having the factor of momentum can be, to me, a really important part of a portfolio. And momentum is going to hop in and out of the different parts of the market. So if all of the mega cap companies are the ones that are making the money, momentum can hop into those mega cap companies. SPMO can hop into mega caps. And then it will rebalance again, and maybe if over the next time period value is the one that's doing well within the general larger cap S&P 500 type of stocks, well suddenly now you've got value type of companies in SPMO, and if those are the ones who are doing well and they end up doing well, now you got value companies. It's hopping into the sections of the stock market that have the highest momentum. That's why I like it. Now there is an ETF that does better than MGK that I didn't list here. If you want to check that one out, take a look right here.